good afternoon to all of you, including myself, being back in Amsterdam, webinar from 𝘁𝗵𝗹𝗹, an important webinar as well, our end of year edition of the Dairy Café, Vesper's bi-weekly effort to keep you updated on everything, anything new in dairy. Thank you all for joining us. I think it might seem early to look back, but as true Europeans, in 2 weeks' time, it might be getting very close with Christmas. Yep. So this will also be our last episode of this year. What we want to do today is a broad market recap, not a general market, but a broad market recap. We want to go past different product groups. We want to go past, of course, butter fats and everything we've seen happening there. The exceptionalism of proteins will be covered. We'll look at cheeses. We'll look at milk powders. And of course, we'll look at the fundamentals. We'll look at it both from a supply and a demand side, see what data is available, see what we already know, see how we look back, but especially, of course, important, see how we look forward. And luckily for all of you at home, or at the office probably, it's not me giving this information. It's just me moderating and hosting these two gentlemen. Sebi, head of our marketplace, and of course our dairy analyst, Jasper. Thank you so much for joining us once again, one last time this year.
Yeah.
Perfect. Thanks for joining us live, man. Good to have you back.
Been a while.
It was a big flight to get here, but I wouldn't miss it for the world. I want to get started. I think we can dive in and go straight to the markets.
Let's do it. Yes. All right. I think starting off with milk fat. Of course, that includes butter. The product has been, I think, the weakest out of all of them this year. Yeah, I won't look back at the entire year, but I think there's a couple of highlights that we definitely need to have a look at. So if we consider that at the start of this year we're really worried about, okay, are we going to move away from the €7.5 per kilo price, 7,500 euros a ton? Well, we definitely did, from 7,500 all the way to our latest price just above 4. And yeah, looking at the latest price levels, we're already seeing this is going to drop below 4.
Yeah, definitely. It was a bit of a roller coaster the whole year, to be honest. It went up very drastically, and then it kept on going down.
Yep.
And I think especially we expected that price to ease out in Q3 when we thought the peak of milk was going to come.
Yep.
We started, I think, if we just do a bit of retro before we go into next year, we started the year with a lot less milk than anticipated. I think that was also due to the price of the milk going down quite heavily, and there was a few things that were 𝘁𝗵𝗀𝗶𝘀 that we've mentioned a lot throughout this year. That had a massive impact on the butter price, and butter price actually kept on just sliding up and up. And as soon as we saw a bit of relief, so that volatility, we thought, okay, I think a lot of buyers were hoping for a big decrease.
Yep.
And instead of this happening gradually, it happened actually in one go due to several factors. I think that one of them was, as we've mentioned, since July, the calf production or the calf birth being pushed out a bit due to that 𝘁𝗵𝗀𝗀𝗀𝗏. So we had a second peak that arrived much later. Extremely good margins. And we talked about this through the whole year, and that's why we expected that price to also ease out a bit, just because we had margins that were extremely favorable for farmers, which basically pushed us to think that the price was going to go down. It's been a very interesting year. And I think that relief was much needed, especially on the buy side. Now it did as well have, let's say, a counter effect as well, is that a lot of people have bought it because they were basically being told through the start of the year that there wasn't going to be enough milk. That if you wanted your stock, you had to purchase it for Q3 and Q4 while you were in Q2. So a lot of them had actually purchased very expensive stocks.
And this is where I want to kind of add what we saw that butter prices were relatively high, and people started to wonder, okay, is this going to stay around? Well, one of the things that I try to explain to people is if we look at other countries, in this case the US, and their domestic butter market, how it's been operating, we had a very similar situation in 2024 where US butter started to fall around the Thanksgiving period, the purchasing period for Thanksgiving. Why? Because there was a moment where suddenly all buyers had already bought the volumes that they needed, and at the same time, the market kept on pushing for more milk fat. So there's this situation, and that's exactly what happened in Europe, albeit a year later, where the supply keeps on pushing while buyers suddenly step out, and then it turns out that prices, even for milk fat, can fall incredibly fast in not that much time. Because I think at least you can see that until halfway throughout August, So that means that for 7.5 months, we've been trading around that 7,000 level, and it took us a couple of weeks actually to trade 2,000 euros per ton lower. So it can go really, really quickly when those buyers step away.
How much of we're looking at the US butter price and the European butter price. How much of this is due to them influencing each other? And how much is it to them having relatively similar fundamentals in their domestic market?
More than you would usually have. What we see is that butter markets are generally domestic. So the European market really relies on European consumption and a little bit of US consumption for the ones that prefer the yellow Irish Kerrygold. But at the same time, once there's an oversupply, like we have seen in the past few months, if not longer, you start to see that these markets move much more in line. Why? Because they're competing for the same demand in certain export markets. Domestic consumption can't hold everything. You can't stock up until the ceiling blows out, so you have to make sure you export more. And when these markets are starting to compete with each other, like we see for cheese, like we see for milk powders, like we see for whey, other global commodities, it's more and more focused on a global market for butter, which is kind of odd to say because it's not something we would expect, let's say, a year or two ago.
I think we have two relatively similar questions in the chat, or at least not maybe a similar question, but a similar answer they're looking for. One is, would you suggest a hedge and lock in beyond Q1 at this time for butter? And the other one is, how low can EU butter go?
So it basically comes down to whether now is the right timing already. Yeah. I think based on the current fundamentals that we're seeing in today's market, and also the seasonal patterns that we usually experience, that's why I'm actually, it's almost like a setup for the next few widgets that I had lined up. Based on today's discount for cream compared to butter, I'll actually pull up just one of the cream prices. Cream is at 4.1, butter's at 4.09. It's just very, very similar. This shows me that there is going to be cheaper butter produced than the 4.09 that we're seeing today. So butter prices have some room to fall in the coming weeks. That doesn't mean they're going to fall endlessly. I don't think it's fair to expect that butter prices will go well below 4 or even to 3. I think that's a very bold statement, and I wouldn't like to go there. But I do feel like even at the levels of 4,000 today, we have some room, and we're already seeing some prices at 3.8 being traded for Q1.
Definitely no. Last week, so we had a 3.9 on the platform, on the marketplace. That's delivered as well, so meaning that what we was bought at 3.8 for exports.
Yeah.
So definitely we've seen already levels below the 4. I think 3.5 is definitely attainable when you look at the cream price we have right now.
Yep.
Now, are we going to see a lot of products under 3? I doubt it. If we do, lock in as long as you can. It's probably my suggestion.
So for as long as we can give purchasing advice, I think it's good to know that there's still some downward price potential in the coming weeks. Not that much upward potential at the moment. I wouldn't wait endlessly, because there is going to be more upward price potential once we reach the new year. It's not a switch all of a sudden, and we will slowly come in. But it's still definitely a weaker market for the next couple of weeks.
And I would say, Sebi, you are probably the best man to ask about butter prices, being head of the marketplace. Vesper's initiative to allow our users to directly, buy and sell butter, S&P, cheeses, lactose to each other.
No, indeed. And what we also added since the last 2 weeks, which had a massive impact on liquidity on the marketplace, is that we have something called cross sales. And so now when you have buyers that do not do a deal through the platform, but I really love the initiative of having transparent prices, they can actually cross sell, which means report that price to us, and we're then able to put that price on the platform, bringing a lot of transparency and no liquidity to the marketplace suddenly.
Yep.
And we've seen a massive boost in liquidity since 2 weeks, thanks to that. And we expect that to continue with the more people joining in. Now, you can't just say whatever prices you want. You have to sign a code of conduct. Prices have to be relative and have to be close to the market. Otherwise, we need a proof of transactions. So we are extremely regulated with the price that we let on the platform, but that has a massive impact. And that's exactly what we saw last week. And there was deals that we done outside the platform at 3.9, but I will report on the platform, which then brings a lot of information to the rest of the industry, the people that follow the marketplace, because you can follow in real time with significant volume to see where the market is trading. That's what we saw for Q1 at between 3.8 and 3.9.
Okay, so verified trades on the platform, and not only the ones that are done on the platform, but also from outside the platform, bringing them back in.
Exactly, and what it does as well, it triggers more buyers to actually jump in the market. They feel very comfortable. We're seeing prices up. It's a verified price, so then they're actually comfortable putting their own bids, and that closed another bid through the platform thanks to one of those cross sells. So it's extremely positive, and we think that initiative is going to have a big impact in 2026.
And honestly, with prices dropping more than 8% in the last week, I think intra-week pricing, be able to see on a daily basis, real time, what's happening.
It is so important. You just look from one price to the other. We've had, a 4.2, and we thought that was already a big jump from 4,400, and then the next price we could see it was at 3.9, right? So that's 300 euros within a couple of days. So it's extremely volatile. It goes extremely quickly. So that's why it's very important to keep an eye out on this marketplace.
Perfect. Well, sounds great. Good to know more about the marketplace. If you're interested, seb@vespertool.com is the best way to go.
That is the best way. That's the best way to go indeed.
Perfect. Jasper, I feel like you want to continue with fundamentals on butter.
Yeah, I feel like it's good to move from the current market status towards a bit of a forward view. I mean, people are also interested to know what the hell is going to happen to butter prices in 2026. I think it's very fair to start with mentioning that at this point in the year, we're at the start of December, almost around the Christmas break. Butter production is only going to increase seasonally from this point onwards. Even if we standardize the 30-day month, it will become a little bit more clear. Yes, the latest numbers have been up quite a bit, but they are going to go and increase on a monthly basis towards the peak in May. So that means that from this point onwards, we will be building stocks. And with the market already feeling quite heavy today, yes, of course, that includes some forward selling because people anticipate this additional stock or production. We know that there's going to be a lot of butter to be sold throughout the rest of 2025 and actually the first 1 and even 2 quarters of 2026. So on the supply side, we are going to still see quite a heavy butter market in the first few months. Some early indicators, actually, what I also wanted to add to that, we haven't had the latest production numbers for butter yet, but we do see that the cream premium compared to butter is relatively low. So that opens the window for butter production if there's enough milk. Well, that's my point. There is more than enough milk. The latest numbers for France are out. They're incredible. We also have the latest numbers for Germany, UK. I can show all of them, but I think it's very familiar or a similar story. They are all up, and it's really significant numbers.
Yeah, and I think what we can expect, being this bit of an outlook for 2026, I think we can expect that to continue.
Yeah.
In 2026, the simple reason, not even if it's a good production, yes or no. We've had a very slow start this year, so we were in the red this year when we started. Yep. So regardless of what happens, production being extremely up, yes or no, we are going to be probably better than we were last year. We started very slowly last year, and it feels like it's going to be the opposite this year. We're starting strong, and while milk prices correct themselves, like they always do, more towards Q2, Q3 probably, then we might see a switch. And then the numbers, which were really high right now, with those green numbers, might turn actually red. So we might see the opposite of what happened last year.
Yeah, I think that's exactly what we see in the screen as well. And the start of April was actually the moment where, in this case, French milk production exceeded last year's numbers. So you can see that 2025 in Q1 wasn't great. So it's very likely that we will exceed those numbers. And that's something that's quite accepted. Everybody feels the same way. But when we look towards Q2, then we see that the opinions start to differ a little bit. Mm-hmm. Some people will say, well, I'm more intrigued to say it's going to be earlier. So the squeeze in milk production will be around April, May. It is in peak flush, yes, but they will see negative growth in a year. Others say, no, it's going to be after summer or throughout the summer where we really see that change.
Yeah, and I think the point that you're trying to make here, it's nobody's saying it will never go up again, right? Everybody's saying the question is when.
Yeah, just when.
And talking to, because I was very intrigued by these numbers right there. They're extremely high. So I was at the 𝘁𝗫 last week. I talked to some French suppliers. And the point was also, listen, we are having less and less farmers in France. So the long term is going to be, we're going to have less milk.
Yep.
However, there was a bit of circumstances this year. And a lot of people that were supposed to actually retire this year with such a good margin actually postponed it. We're like, well, if you tell me that I've basically lost a bit of money over the last few years, and I can make quite a bit before I retire, well, then I'm going to milk as much as possible. So apparently that's also been an impact, especially in France, what we see in those numbers. So I think as long as we'll see, and I think that's why what we've been looking at a lot this year, and what we should really be looking at in 2026 is this margin. Is this margin we have that widget, and I think it's an extremely important one because that gives you basically a real-time indication of is it going to be profitable or not to be a farmer.
Yeah. I think that's actually indeed the final thing I wanted to say. I'll pull up the German, I'll pull up the Dutch 𝘁𝗵𝗶𝗀𝗶 price for milk, and at the same time dairy cattle feed. We have a forward view, or in this case a way to look at this margin ahead of time. If we pull away the butter and the cream prices, we have our milk price and our feed price. If we look at this historically, we still see that the margin is good. And something that's very interesting to have a look at in early 2026, we are going to see whether the margin will stay green, or for basically farmers will make enough money to keep continuing with this high milk production, or it will go below their margin, and the margin will shrink. It will go below the point of profitability, and we'll really see a crunch in milk production, because that's the most interesting part of this year. The margin was significantly better than people expected it to be. So we fed dairy cows a lot of additional feed. That's why the milk fat content went up. That's why we had a lot of milk volume as well. So with the same number of cows, we didn't really have that much more cows. Yes, we did so in the US, but in Europe and also New Zealand for a little bit, it was mostly because of yields. That reliance on yields vanishes really quickly once we don't see that margin anymore.
Yeah, exactly. So really keep an eye on that one over, especially in Q1 and Q2.
I think that's something that we also wanted to kind of focus on is for all the products, and we've been talking to many players in the industry over the past couple of weeks. For all the products, it comes down to when will we see that surplus of milk that we're currently seeing transform into a deficit. And it won't be that suddenly there will be no milk at all, because maybe in the peak of flush we will kind of move from green to red numbers. But the fact that nobody really knows when that will turn is really kind of the main uncertain point of this market.
Completely. And I think that brings me, I'm not sure, should we say the quotes? Because we have to prepare for this 1 hour long Dairy Café. We have also asked some people in the industry what they think. And it's always good to have our opinion. We also believe it is very strong. Of course, we get our opinion by talking to people.
Yep.
So we've gone out to ask different people in the industry that have some good knowledge what their opinion was for Q1. So this is the one from Henk from Frisena, who's a dairy trader here in the Netherlands. And that's what he says. So butter remains weak for the next coming quarter at least. There is still plenty of milk on the farm level, and this needs to be absorbed by the market. Both skim as well as butter, therefore have real no upside potential. Most of the butter buyers are coming for Q1. Though traders are short in general, they have no problem in finding the need and quantity for their shorts. As long as milk output remains strong, the downward trend is still active. So that's exactly, I think, what we were talking about. And the big question remains, that's your last point, what will milk supply do after Q1? Will we see Q1 peaking as normal, or will we see less milk? So I think that's basically what you're showing as well in April when we saw the switch this year.
Yep.
Do we expect that to happen, to still happen in Q2 this year as well, to still see some good level, or are we actually going to see the opposite this year?
Yep.
And this whole volatility, and I think that's exactly what, if you want to find volumes for Q1, it's extremely easy. Q2 is starting to be a bit more challenging, and taking the positions, or at least at a different price. It comes at a bit of a premium, and Q3 seems to be completely a bit of an unknown for the moment.
Yeah, the more uncertainty, the less.
It makes sense.
Less smart. Yeah. Let's ask our users what they think about European butter prices. And I asked you what question to ask, Jasper. You said, let's ask the users when they think European butter prices will go above 4,000 euros per metric ton again.
Yep.
We have a few options, and you'll see it on your screen, whether you think that's going to be in Q1, Q2, second half 2026, or you believe it's a long-term effect and we won't see prices go back up again until 2027 or later, so a really long term. let's give everybody some time to answer.
Yep.
And maybe that gives us some time also to already have a little bit of a look at the US butter prices.
Yeah. I will actually show the US butter price. We'll start in US dollar per ton to keep it somewhat comparable for the European folks. Still, we see a very, very low butter price, the lowest one we've actually seen in our VPI history for US butter. So we have never seen a price below $4,000 per ton for our VPI, but now it's actually almost at the 3,000 level. I do feel like we haven't seen the end of this, especially with the European market also feeling weak. It's the Oceanian butter feeling weak, European butter feeling weak, US butter feeling weak, and yeah, we're just seeing a lot of products though.
And with and I know we'll get to the 𝘁𝗵𝗶𝗀𝗶𝘀 80 or in the higher proteins later on, but with the all of the investment we've seen in different product streams than butter,
yep,
would that potentially kill two birds with one stone?
I think it will, but at the same time, what we also see is that the essentially the pool of US milk fat will be pulled more towards cheese and whey. So yes, in a sense, there will be less milk going into butter or even milk fat going into butter. But the problem is that the percentage of milk fat is going up so significantly that the total production, and that's something we can actually show you guys. If you look at the milk fat production in the United States, the growth rate there has been so incredible that it's yeah, even though we have a lot of cheese and whey plants coming online, and there's a lot of other streams being out there, if we simply produce this much milk fat, we have to do something with it.
No, completely. And butter and skim is the easy way to do it.
Yeah.
It's an easy way to absorb volumes. So as soon as you're going to see some surplus, it will most likely be absorbed by butter and skim,
yep,
instead of cheese and whey.
The community has spoken, and I think the community, we only see a few people who believe Q1 is the answer. We see even less people who believe 2027 is the answer.
Okay.
So that means it's somewhere in between.
Yep.
We see a third of the people think it's Q2. We'll
Okay.
see a rise in the butter prices, and about 50% believe it's the second half of the year.
Yep.
What do you think? Where you would have voted?
My vote, it's a bit of an odd answer, but I was rather doubting between Q2 and H2 for a long time, and I think I'm going to go with Q2 at the end of Q2, because once everybody starts to realize that milk is not going to be as widely available as it was in the previous years, even though the shortage will only be there in H2, I think knowing and then kind of seeing that the shortage will be arriving kind of leads people to start acting on it in Q2 already. So I feel like the price movement might be slightly earlier than the actual fundamental change.
Yeah, I think it all depends how fast the milk prices are going down. And I think that for long they're not going forward. They have gone down quite a few cents in one go. But I think that we're looking more around H2. I think H2 is the.
I am afraid to say so, but I'm on Team Seb here. We're both betting against our analysts. It's not the smartest move. It's not the smartest move we've ever made, but we've said more dumb things in our life. I think we're both on the H2 boat.
Smart Dairy Café. You know, we just spread the chips around here. So
we'll set
you inside.
Someone will be right.
Yeah, exactly.
We'll set a calendar reminder.
And Q1, then we would have had
that. Okay. That's butter.
Yeah,
I think, and the story is clear. Very much fundamentally affected.
Yep.
Around the world. But then let's go into a totally different story.
Yeah, from the lowest of the lows to the highest of the highs.
Yes.
It's 𝘁𝗶𝗶𝗀𝗶𝘀, 𝘁𝗶𝗶𝗀 80 to be precise, and also WPI. The market for whey proteins has basically geared up. We see that especially on the consumer side, which is actually complete opposite to what we see in butter, but also skimmed, where everything is supply driven. In whey proteins, it's really demand driven. There's so many new consumers on a daily basis that start consuming more whey protein, whether it's clear whey, whether it's bars where they now consume it, all these additional streams on top of the normal 𝘁𝗶𝗶𝗀 demand that we've always had for sports nutrition. It's just a market that doesn't have enough product for all the consumers that are out there.
Better? Let's see if we get answers now. Yes. Okay, we're back.
That should be okay. Muted. I don't know how that happened. So what I was just trying to show you is that 𝘂𝗶𝗶𝗀 is just much more in demand nowadays than there is supply. We are seeing that there's a lot of new consumers, whether it's outside of sports nutrition, whether that's yogurts, clear whey, protein coffee is actually something that I've heard of this year. All of these new kind of streams of consumers that are coming into the same market with a limited pool of suppliers. And still, yes, we see production capacity expansion, but it's not enough. And that's why we're seeing the highest price that we've ever had for 𝘂𝗶𝗶𝗀. Also, 𝘂𝗶𝗶𝗀 is kind of the following the same trend. For Europe, we haven't reached the highest price again. So we've had 22. That was at the start of this year. Now we're moving up to 21.5, but I have an inkling based on the last couple of weeks is we're going to exceed that level. For the US, we definitely see the highest level that we've ever seen for 𝘂𝗶𝗶𝗀. It's just this market at the moment doesn't seem to have reached this peak. And it's really interesting to kind of see how this will develop in the coming year.
I think that's it's clearly a story where we once thought that the 𝘂𝗶𝗶𝗀 and 𝘂𝗶𝗀 were benchmarks that we made specifically for the sports nutrition industry. I think that thought really also is long gone. I think this has become mainstream, and that means that it's both a market where the supply side is also massively developing, but not at the same rate as the demand side. And it will develop, but these are of course long-term projects. Well, new consumers are found on a daily basis in the supermarket, buying new products with protein there. I think a really nice question, and I wonder if you can answer it today or if you want to keep it for another day, but I'm going to ask you anyway.
Yep.
Question in the chat: what will be the impact of high 𝘂𝗶𝗶𝗀 and 𝘂𝗶𝗀 prices and substitution with other protein like yeast or rice protein?
I must admit I haven't made those comparisons yet, but I think that's a good one to make. What we do see, at least in the dairy industry, to at least mention some alternatives, is that if you compare, for example, 𝘵𝗃𝗃, it's also a widely used protein in both the European and US markets. Can't be used in whey shakes, of course, because it's not whey, but in some other applications it can. It has a higher protein level than 𝘂𝗶𝗃, but it is roughly 40% cheaper. And we are starting to see people switch, but the amount of people that are switching is very limited due to restrictions in their recipe. So they can't switch all of their products to this new protein or different protein. So I think for other products that are most likely a lot cheaper per gram of protein, there might be some switching going on, but it's relatively limited. And I was surprised by how few people are actually able to switch away from whey protein. It's also one of the reasons why this market is exceeding all the others.
Yeah.
So I will come back on that. I think it's a good one to look into.
But you expect that over the coming few years, some people, new technology or recipe to switch because of those high, the cure, as I always say, right? The cure to highest prices is high prices.
Yeah.
But due to those high prices, there will be investments in order to use other types of proteins to basically counteract them. You can see now in the supermarket, it is a bit of a war towards who can offer you the cheapest protein.
Yeah.
So at some stage, they're all cutting their margins. If you want to keep your margins, you'll have to find alternatives, and that is buying at a better price or switching recipes, etc.
Yeah, but I think it's the ideal investment climate with sustained very, very, very high prices also for alternative streams like precision fermentation proteins. But it's still, of course, it's a micro bit of such a large industry, and I think the nutritional values of dairy proteins are still very hard to find in non-animal based proteins. I think the volumes are very hard to find in real alternative streams. We do see some extremely exciting startups. We see some extremely exciting technology being done there, and it's definitely a thing we're looking out for and we'll keep looking out for. But it doesn't feel for me like a 2026 solution in any way just yet.
No, I think what I would like to add there is I totally agree with it. And at the same time, we also see that now that the consumer base is growing at the same time, we have a lot of new parties entering the market that are trying to win a bit of market share. They're trying to eat away their own margin just to make sure that they get a bit more of the total market share. So that means that consumer prices for some of those several proteins or these products that contain a lot of protein haven't really gone up the way that you would see butter prices go up in supermarkets or other prices go up. So the consumer hasn't really noticed this much higher price of 𝘁𝗶𝗶𝘀 or 𝘁𝗶𝗹. And that's also creating a market where, yes, supply adjusts. That's what we can see in some of the fundamentals. For example, if you look at the 80 production in the United States compared to a couple of years ago, yes, we have seen the highest level in August we've ever seen for production, also for 𝘁𝗶𝗹. But if it's only the supply side that's adjusting to this higher price, and we don't have a reduction in demand, it's just going to take so much longer. And we can't expect 3 new facilities to just pop up next week and start producing 𝘁𝗶𝗹. That's not how it works.
And I think one of the most exciting graphs that I'm totally sure that Jasper will bring to Vesper in 2026 is the graph of Ozempic usage, GLP-1s, how that's growing throughout time.
Linear growth. Right?
Yeah, but it's massive, and we know it comes with lifestyle intervention. We know it comes with a protein diet.
Yep.
So we see there's so much happening there. It's difficult to track for the time being, I believe.
Yep.
But and
it's only going. And it's, to be honest, I think it's only going to become more available. They're working on. I mean, there's massive investment behind. They're working on now pills that you can take instead of a shot.
Yep.
More accessible to more people. You see country after country basically legalizing it. So the US was the forerunner on that. You see here in Europe, it's quite easy to get your hands on it. I think we all have a friend that basically has tried or is trying it.
Yeah.
So yeah, it is going to be more readily available, and yeah, the cost of protein, the cost of that is protein on the other side. Right?
Yeah.
Protein is going to keep on the demand for it is going to keep on exploding.
And we know that the biggest shifts in actual pricing over time are not supply driven; they're demand driven.
Yep.
If demand fundamentally changes, we see totally different markets. While supply is always seems to be a bit more in control. 2025 has also brought us a lot on the higher protein space. We've already mentioned that with the 𝘁𝗵𝗃s having different applications, and with the 𝘁𝗵𝗃 having different applications, but also the combination of instant and regular. We've really worked hard at Vesper to add on to our benchmark availability. We've added regular prices 2 weeks ago now, I believe, aside from the instant price we already have. But leading to just a general basket of specialty protein benchmarks that I think you can't find anywhere elsewhere with this updated weekly, with this breadth of availability, combining casinates, both sodium and calcium casinates, NPCs, NPI, 𝘁𝗶𝗃, 𝘁𝗶𝗹, all available on a weekly basis. So I think there's a lot of hard work for you in there, Jasper.
Yeah, it only means I need to produce more benchmarks on a weekly basis, but I'm always happy to make sure that our clients are able to track these markets on a weekly basis. Because yes, this is where we see a lot of growth still taking place, consumer growth, also production growth. We have several plans also from partners of us that are coming online next year, and that will only mean that this market is going to grow both in production and consumption. So it's definitely something to keep an eye out for in the next year.
And I think the people doing the actual hard work are you, our users, our viewers, the ones giving input, being in these markets, giving input on these prices on a weekly basis. There's such a large group of you looking for transparency, looking to benefit trade. So a good combination between the community wanting transparency and Vesper being the party to facilitate that. So really happy with that. Yep. We also have a poll on 𝘁𝗶𝗃 pricing. What did you ask this time, Jasper?
I was wondering how high people see this go, because definitely there should be a point. I mean, that's the theory behind it, where either the supply really goes through the roof, or we already talked about it, it's kind of difficult, but where demand should drop. Maybe it's a margin that decreases, or something that changes. But I'm wondering where that level is. How price elastic are consumers in this sector? So that's why I wanted to kind of figure out how this should develop.
So the questions are, how is the high? Currently, what's the price levels we're looking at, Jasper? Can you please?
Yeah, if we're looking at the 𝘁𝗶𝗃 price for European 𝘁𝗶𝗃, we see 13,000 euros per metric ton. And for US, I'll actually go and look this up in US dollar per metric ton. We see just shy of 16,000 US dollar.
Yeah, and the question is, of course, for euro per metric ton. Yeah. So, and then we're looking at the average maybe of US and Europe, currently at 13,300 67, so it needs an increase of about 1,600 euros per ton to reach this on average. It's a big jump, but it's also with these prices, it's only a bit more than 10%.
Yeah.
How much did we see this year in increase from the start of the year to now?
On average, compared to 27th of November last year, an increase of 28%.
It's a big jump.
Yeah, it's a big jump.
So it's, in that case, we would only need half of that to come up to the 15,000 level.
Yeah, some people might also say, right, we saw most of the jump this year, and then next year might stabilize at those prices. I don't think anybody's expecting a big decrease that we're seeing in butter, but maybe a stabilization of the market had to get to a certain point of demand outweighing supply. That's how much it is, how much it basically costs now. But if you just look at a couple last weeks, it's still going up. So it doesn't seem like it's stopping anytime soon.
We have nobody who's answered, which is not really surprising, down from here. I don't think that's the sentiment. So that's. But we have seen a balance, which also maybe makes sense if we look at both buyers and sellers entering this market. Although every answer honestly, there's also a bit of a wishful thinking, of course, always what we see here. We see about fairly split in half whether we do or don't hit the 15,000 euros per metric ton mark.
Okay.
And although we always love a balanced answer, it's always a safe place. Let's take you out of your safe place, Jasper. What do you have voted?
I think we're going to hit 50. I think that it's. I can be very short about it. I think I've explained why before. We don't see that destruction of demand at these higher prices. So that really, there's nothing that prevents this market from moving a lot further. Yes, there's a lot of buyers that say that they want to pay up, but ultimately, if the consumer demands your product, and you're still going to make some margin, then what are you going to do?
Okay.
And that it makes it very difficult, and it's a very odd and uncomfortable position for many of these sports nutrition brands to be in, and also don't want to be in their shoes for some of this, at least for the 𝘂𝗶𝗍 market. But yeah, I mean, theoretically, that's how it should play out.
I mean, at some stage, I think there's going to be price expectations. They'll have to up their price to consumers if they want to keep their, and some companies, I think it's an overcrowded space. So there might be companies that will, that might not make it anymore due to margins, and the ones that are staying might up their price at some stage. There is a lot of different ways of, for the moment, just extremely crowded.
Yeah, but I think the overcrowded space is, of course, in the sports nutrition space.
Yeah.
I don't think the retail space or the healthy consumer space is necessarily an overcrowded space.
No, I don't think so.
I think we might lose on one side, but we can get it back on the other side. I think it's difficult to track. I think Jasper has a lot of work to do on the 𝘂𝗵𝗶𝘀𝗀 side, on the retail demand side here for proteins. I think it's a tricky one, but you guys are agreeing.
I am in accordance with my colleague here.
You're such a.
Are you? No, you might as well say the other one then.
Yeah, but because you said one, I'll go for no. I think it's a difficult one to say. I do think the rapid growth is something that we see seasonally as well, heading into the winter season, heading into the for sports nutrition at least, heading into the I'm going to eat healthy season starting in Jan. We always see a rapid increase. I don't think the increase will stop. I do think it will take a while to hit this.
Yeah.
But if I hear what I hear from trading on the ground in the US, where people should be happy to get a truck at all. Yeah. The top is not in the market yet. I would say, but take that with a grain of salt and just listen to Jasper. On to the next.
Yeah. There's two more product groups I want to cover. That's cheeses and that's milk powders. Starting off with the cheese markets, I actually focus on mozzarella first because it's very interesting to see how the global markets of cheese have actually developed. Similar to butter, cheeses are generally a more domestically driven market, both in Europe and the US, which are the biggest producers of cheese. We see that most of the consumption takes place from its own population. However, when there's really an excess of demand, there's certain markets like Mexico, but also South Korea, Japan, that start to import some cheese. Over the past years, we've definitely seen that the US has been upping their production capacity, but at the same time, because whey was also doing that good, there's a lot of people that just wanted to produce more cheese based on good consumption, but also the whey stream that was really profitable. So we have seen a lot of growth in the cheese market, and that's definitely also what kind of when buyers stopped for a few weeks. That's also what pushed down. Actually, procurement soil in this case. What caused these prices to plummet in the European market is also here we've seen a price decrease of over 4,000 to well below 3. It's a decrease of almost 25, or at least more than 25% as well. It's massive.
I think that's it's interesting to see that the added whey demand also comes with, of course, added cheese production. And I think the more cheese that's there, and I think that's also what's really fitting in the US, is you need to be competitive on a global market.
Yeah.
It's something that is almost a domestic market. It's not really changing to an export market where there's strong competition. It's one of the biggest.
True, I think true, but I think that most of the demand is still domestic. So it is still a domestically leading market, I'd say. I think if you have a strong export, it might have an impact, but still, I think European cheese and European demand is what is driving cheese prices.
No, it is, but I think it's really good to mention that it's very similar with butter. The moment that you really have a surplus, you will have the export market to help you out to kind of keep your market somewhat balanced. And if there's one player in the market that has that, in this case, the US had that until, let's say, August this year. The US was able to export, therefore their prices were they were low, but they weren't lowering to levels that were really painful. But at the moment when Europe starts to enter the global competition, that's when it starts to hurt, because the US was already there and they were still producing a lot of volumes. Suddenly Europe came in, and that's where we also see that over the last couple of weeks, and I'll actually pull the US dollar prices again, we have seen this switch where Europe was much more expensive. Suddenly Europe was much cheaper. The US actually, some domestic models came in for the holidays, but then the moment that spread is negative for too long, and the US is cheaper, they're more expensive. They have to lower their price. That's why we're seeing 𝘁𝗵𝗶𝗀𝗃 prices, cheese block prices, plummet well below the average that we've seen over the last couple of weeks, because now they don't have the export opportunity. And that's definitely kind of a big factor in the cheese market for US and also Europe, because as Feiko already mentioned, due to the waste stream also being good, but generally domestic demand being the main driver, we have seen more cheese being produced. It's been more cheese being produced in Europe, more cheese produced in the US, not just cheddar, not just Gouda, also mozzarella, some other fresh cheeses are produced in higher quantities. So it's definitely something that we need to make sure that we keep on moving those volumes, and that's also why today's markets, because cheese, it ages, it loses value relatively quickly compared to other products, and if you need to sell it before the end of the calendar year, it's a much harder choice than let's say, okay, I can freeze my butter, maybe sell it in the next year. For cheese, you don't really have another choice but to sell it now. That's also why the export demand, when it's not there, it hurts a bit more, because there's just 5 or 10% more cheese that you need to push into the domestic market. And something that's quite interesting, for example, if we look at the European cheese production on a monthly basis, we produce, I'm just taking this number, but you can see it's roughly around 900,000 tons a month. But if we take a look at the butter production of the European market on a monthly basis, it's, the latest numbers are around 180, but let's say it's around 200,000 tons on average. So we have more than 4.5 times as much cheese to sell on a monthly basis than we do with butter. So definitely when the volume stop moving for cheese, it starts to hurt much more quickly than it does with other products.
Yeah, because the only way to basically sell is to just drop the price aggressively.
Well, aggressively is only necessary when the pressure really starts to build. But yes, price is one of the only options that you have. And especially due to the aging process, it can sometimes be a little bit quicker than with other products.
Yeah, and if we look at the price developments over the past weeks, aggressively seems to be the correct phrase, right?
I think that's just in almost all commodities, a part of protein, as we just mentioned. But what was just an oversupply and just a very low demand for it.
Yeah. But it's we're heading into some of the most quiet weeks of the year. We have really quiet weeks throughout the summer months as well, but the Christmas weeks are also not great in demand. So suppliers are actively making sure that they've sold everything for those weeks already. And if you haven't done so, yes, then that means you will have to go lower in price. But at the moment, at least for the European market, there is some export competitive. They are competitive in export markets, so prices are lowering, but not as fast as they did before. But for the US, yes, we definitely see some weakness because they're not that competitive just yet.
And you expect that, so people are probably selling a lot now. Do you expect that to continue in Q1, or did you hear anything in the market?
Yeah, at the moment, I am hearing, and that's also based on the players that I spoke to, what they've mentioned to me is that they're very interested in selling Q1 or Q2 at the moment. So they are anticipating that the cheese production will be good in Q1 and Q2. They're not sure about the outlook regarding milk, and they're not sure about the outlook in price, but they know that there's going to be a lot of cheese to sell in Q1 and Q2, so they're actually anticipating on that. If you're going to, and this is what I find really interesting in the cheese market today, selling forward for Q1 and Q2 is very interesting to do, just to make sure you have something in the books. If you're left for the spot market in Q1 and Q2, it's not going to be a very fun place to be. So they'd rather kind of stay ahead of the curve, start to look forward, sell forward already when the price is right based on today's price, but they're not going to wait around and just see it drop lower and then only come back to the market at that time.
Okay. Time for milk powders.
Yeah, I think the final product group that we wanted to cover is milk powder. I think this the really interesting fact what you said is that demand moves markets, and if we zoom out to the 5-year price development of milk powders, I think it's very easy to point out where the Chinese demand for skim milk powders was active and where it started to drop off. You really see a significant change in where the average price of certain commodities, in this case skim milk powder, is hovering. And actually, since that demand has been dropping away, so let's say 2023, we've had a more balanced market, hasn't really moved. It just hasn't been good in 2023, hasn't really been good in 24, and also in 25, we just didn't see great demand, but there have been some changes in 2025 that I want to zoom in on. One of them being that the production was actually much higher than anticipated. Something that's kind of overshadowed is that we suspected that 23, 24, 25, the fundamentals have all been not great production, but also even worse demand. I think for this year, what we've seen is that the production, if we zoom in, for example, just September, the year-to-date volumes, yes, we've gone down every year, less and less S&P was produced until we came to this year. We have had more production of S&P in especially the second half of this year in Europe. So it's not just supply being bad, we actually see a recovery in S&P production. It's quite interesting to track. While we've always said that demand was weak for S&P, but we know that S&P is roughly, let's say 50% of the market is domestic, 50% is exports. And at the moment, if we look at the monthly volumes compared to the year before, the export volumes of Europe S&P food are actually very, very good. And it's kind of surprising because it's the same for New Zealand, also the same for the US. So even though we've seen fundamentals switch from not that much supply, but even worse demand, now it's kind of interesting. The production is picking up, but so is demand. But prices are not necessarily moving up as a result.
Where's the S&P going?
Regarding price, you mean?
No, to which destinations?
To which destinations? I think that's actually a good one to look into. What we can do is add a widget where we can show the total import exports. Let's do the import export table to actually show everyone where it's been going. Go all the way to the bottom to our newly created import export table. We're not looking at the Albanian imports. We're looking at exports from Europe. Europe 28, what you will like to see?
We'll keep UK in there. I love them.
Once we've seen these values pop up, we will go into S&P food. And just to make sure that we have our most up-to-date numbers, over the past months, of course, it's definitely interesting to always combine this with the fact that geographically, some countries simply have an advantage over others. We have seen, and we're loading the 2025 October numbers as we speak.
Big data set.
It's a big data set, so that makes it slightly longer or less easy to load. But it does also show you that there's much more value you can achieve from tables like this. Once the latest volumes are in, voila. If you look at the year-to-date volumes that we've sent to these countries, you see that the Middle East, yes, it's been on top, but so far this year we haven't really exported just as much. While Saudi Arabia, compared to years before, we've actually imported a lot more so far this year. Indonesia, so Southeast Asia, together with the Philippines, Malaysia, and even Vietnam are also up. So it does show you that even though North Africa might not be as big in imports anymore, we are seeing that our competitiveness in Southeast Asia is actually growing a little bit. While in the Middle East, we're also able to supply more buyers with 𝘁𝗵𝗃 from Europe.
But this is, of course, export product, but also competitive product number one.
Yep.
Being as commoditized as it is.
Yep.
If we compare this to what New Zealand is doing and to what the US is doing.
Yep. If we look for the US exports of 𝘁𝗵𝗃 food, it will also take a while. At the same time, I'll actually show you how competitive these prices are, because what we are seeing is that over the past few months, these prices have been very, very close, or at least very, very close together, within the €100 price range most of the time. Yes, that means that in some weeks, and that's also what we've seen over the past few months, currency exchange rate open or close entire windows. It might be that in a certain week you're very, very able to export wherever you want, and the next week, because the euro becomes more expensive again, you're not able to do anything. But if you look at the US, for example, the US hasn't been exporting that much. Kind of interesting. So that means that Europe has been taking some of these volumes. Because Philippines is down, Indonesia is down, Malaysia is down, and also Vietnam is down. So it really shows that Southeast Asia is kind of where this competitive market really plays out. New Zealand's probably also exporting a lot to these countries. So it really shows that those markets, they make the global 𝘁𝗵𝗃 market.
Yeah. Do we see the drop in butter prices in the US? That was, of course, a lot earlier than the European one.
Yeah.
Do we see that here as well? So being the byproduct 𝘁𝗵𝗃?
Not necessarily. What we see right now is that for the 𝘁𝗵𝗃 market in general, there's more commodities that are simply more niche, like NPC, for example, that really eat away from the 𝘁𝗵𝗃 space. Yes, 𝘁𝗵𝗃 production is a good outlet once the milk production is as high as it is today. But if you have the option to go for NPC or something different, especially cheese, for example, that you can make with skim milk concentrate, you'd rather go for that, or even turn it into ice cream, than to keep on producing 𝘁𝗵𝗃. So ultimately, Crunch will also reach the 𝘁𝗵𝗃 market. Clear?
Okay.
And I think ultimately, that brings us back to a story that we started at the start of the episode. Next year's outlook is really dependent on the milk production outlook. And we know that at the moment, milk prices, it's something I've been talking about a lot more recently. Milk prices are lowering, and the next upcoming thing that will really determine where prices are going to go, or at least where milk production is going to go, is the on-farm margins. We have the milk cycle where commodity prices feed into milk prices. Those milk prices feed into the farmer margin. That leads into milk production numbers again, and those milk production numbers ultimately determine your commodity prices again. So that's where the cycle, there's always a couple of months of lag in between those steps, where we're really in the step of lowering commodity prices still, and then the milk price is lowering. And once that milk price starts to balance out, we're really looking into, okay, how good is that farmer margin still? And I think that's also what you mentioned. Once you go below a certain threshold, and we know there's roughly 40 cents in countries like the Netherlands, it's 35 cents in countries like Ireland. Once we drop below that level, you'll really see a big contraction in milk production. That's going to push all dairy markets up significantly in 2026. But yeah, at the moment, that's still hard to predict. Even though it is, personally, the lower I see commodity prices fall right now, the more nervous I get regarding milk prices in early 2026.
Indeed.
Shall we ask the community one more time?
We can ask.
The last question.
Yeah.
Milk availability, H1 2026. Are we going to see an increase? Is it going to be stable, or is there going to be a decrease?
Yeah. But I think just to come back on that, and yeah, when we see very low prices, it makes us nervous. It's the same thing when we saw those high prices.
Yeah.
It also makes us nervous. Just on the buy side, right? It makes buyers nervous. It makes their jobs extremely hard. And at the end of the day, we need demand, and we need a strong demand to be able to, to have like a balanced market. And that's just those imbalances are just, I believe, not good for the market. It either hurts the buyer or it hurts the farmer at the end. And so that's why if more balanced market is what my wish would be for 20. Oh, we can see what we can say what our wishes are.
Oh, the wish. Let's give the answer from the community. H1 2026 year-over-year milk availability. I think the biggest amount of people, about half, say it will be stable. Only a few say decrease. Well, almost similar will say there will be an increase. I think on our end we've seen a rather mediocre Q1 if you compare it to the rest of the year.
Yeah.
So surpassing those numbers in Q1 seems to be on the cards.
Yeah.
Whether it pulls through H1, what you said with the milk prices, yet to be seen.
Yeah, I think that's the main thing. The peak of the milk intake, of course, is in Q2 for the Northern Hemisphere. So yeah, that's when we will see the biggest impact of some of these milk prices. I think the Q2 might be slightly lower towards the end of the quarter. So June might not be as good as we hope it will be. But yeah, I mean, as I mentioned, milk margins on farms are definitely the most important thing to track, to have an early view on that.
So that's what your wish is, for people to check that.
My wish is for people to know what the milk price will be in 2026. Yes.
And you, Feiko?
For my wish, I will share a small video. If you stop share your screen, because I think we have something very exciting coming up for the new year, and I hope it's not too loud in your ears.
What a dramatic.
Yeah, it's a bit 𝘁𝗵𝗶𝗀𝗹𝗹. Okay? We have the upcoming release of the 𝘁𝗵𝗶𝗀𝗹𝗹, our very own chatbot, only based off of our own data, our forecasts, our fundamentals, and of course the expert reports from Jasper and his team of analysts here at Vesper, including news sources, but allowing you to ask with simple questions, not complex, but get comprehensive answers, showing you asking about what's going to happen, what are the current prices, how does Vesper work. So I think a thing our team is really proud of and working on hard to release. It's coming soon.
That's really cool. Basically, the ChatGPT, but just based on Vesper.
ChatGPT, but with reliable data. No needing to worry about what's going to happen. Using AI in a safe and smart way.
Very cool.
Yeah.
Very cool. I love it. What a great wish for 2026, I must say.
Yeah, so dairy with AI.
Yeah, dairy with AI in 2026.
That's my wish for 2026.
Okay, let's see who's going to milk the cows.
Dairy data with AI then. That's smarter.
Thank you.
Yes.
Thanks, everybody. Wish you a happy Christmas.
Happy holidays, and we hope to see you in the new year. Thanks for joining us this year.
Thanks, everyone.
Absolutely.
Bye-bye.
Thanks, everyone.